A lot of traders are trading ETFs and futures around commodities, but what about trading or watching both of them at the same time? Our guest today is Pratik Patel to talk about that. So Pratik, how do I use the ETF in commodities and the futures for commodities together?
Well, a perfect example, like I trade commodity futures, mostly trade the grain sector, and they also have a correlating ETF that mirrors that. Almost every single commodity out there, oil, gold, silver, the even the S&Ps, the currencies have a correlating ETF that mirrors. It's not a 100% mirror, but it's almost a 99% correlation between it. So when I trade the grain commodities, I'll look at the DBA, which is the Deutsche Bank Agricultural Index, and it kind of mirrors the overall agricultural sector with all the grains, corn, soybean, wheat, oat, rice, you got live cattle, feeder cattle, you got all those ag sectors. And so let's say I'm getting into a position, I want to see how this market's going to move. I might have an idea or a setup on the corn futures, and I'll look at the ETFs and see how they're moving. If something's not right, I might want to reconsider that trade I'm going to put on, because you got that almost mirroring effect. It's kind of like a lagging indicator, but it gives you an idea of where it could potentially go. So if I want to see something in maybe the ETFs and I want to see it correlating with the grains, then I might just step on the side and just wait to get another confirmation. So the ETF in a way kind of confirms your setup, confirms your idea on that trend or that trade. So a lot of times what I'll do is let the markets open up and see how the ETFs open up. ETFs will open up before the actual commodity markets open up. So you get an idea of the pre-market activity and see what kind of activity other traders are seeing. And one thing about the ETFs, it's higher volume traded than the commodities. I mean, the ETF is almost like a stock. So you got over like millions of volume in the ETF, so it gives you more of the players or traders' idea of how they're treating the ETF versus treating the commodities. So I'll keep them side by side and bounce technical indicators, setups, breakouts with both and see if they can go in one direction.
All right, so when you say that one's not acting right, are you talking about the fact that maybe the ETF's starting to roll over and the futures continue straight, and that might be a sign that something is about to happen?
That's exactly right. So let's say the ETFs are starting to move down up. Yesterday, for example, they started moving down and the grains were moving higher, and it was just not looking right because the ETFs have more volume, they have more kind of indicator of where the commodities will go. So eventually the commodities, confirmed and correlated back, and they dropped to where they're almost matching. They almost also flow on a percentage basis. If, let's say the ETF's down 1%, you might see the grains come down maybe 0.8%, maybe 1.2%, but they're going to kind of mirror each other. It's going to extremely rare to see them, diverge. And when they diverge, they're going to come back and meet and converge back to parity.
Pratik, thanks for your time.
Thank you.
You're watching the MoneyShow.com video network.